Hey everyone, Shawna Downs here, Mortgage Loan Originator. I wanted to touch base with you on some temporary changes that are going on in the mortgage industry, as well as answer a couple of questions that I've been asked by many of you. And I figure if one person is asking this question, then probably many of you have the same question. Also, if I'm not answering the question that you may have, make sure that you reach out to me after this video. All right, let's get started. Due to the increase in unemployment and the concern for a rapid increase in forbearance mortgages, mortgage programs are making temporary changes to their program guidelines to better preserve the health of the housing market and to promote a faster economic recovery. Some of these changes are to FHA, VA, and USDA credit scores. The government programs now require a higher credit score due to the concern for the high number of forbearance loans, and also because this limits the risk of potential homeowners defaulting on their home. Another change that's been put into effect is that they're now allowing exterior appraisals only when necessary, though. So if you have a home that the seller is no longer living in it, if it's empty, then they're going to do a full appraisal. They're only going to do an exterior appraisal if there is an issue with maybe the appraiser being able to get into the home. So something to keep in mind. Also, I just want to make mention that appraisals are taking a bit longer. So you want to make sure that you're allotting for enough time to get those appraisals back, because you want to make sure that you don't miss those commitment dates and those dates that are in your purchase and sales contract. It protects you, protects your money. And then another change that we're seeing right now is in your pre-approval. As far as, some of you have asked me, hey, I'm still working at my job, my employer's keeping me on, but I'm no longer guaranteed 40 hours, maybe you're guaranteed 30 hours. And so what we need to do is go back and redo your pre-approval to reflect the 30 hours a week as opposed to the 40 hours. And this will have to be implemented until you go back to a full normal hour work week. So just keep that in mind. This is really important, and we'll have to qualify you as well off of those reduced hours. And then if you have been temporarily laid off, you will need to wait until you begin employment again. All right, MassHousing down payment assistance. So MassHousing down payment assistance has suspended their FHA insured loans, and that was effective April the 7th. And then you can still utilize this down payment assistance program with conventional financing, and all standard guidelines still apply at this time. So keep in mind, if you are getting down payment assistance, the minimum credit score for the conventional financing is 680. So if you've already received a pre-approval through MassHousing down payment assistance, then we need to make sure that we are updating that and checking those credit scores and making sure that you still qualify. All right. And then a question I've been getting asked a lot, and that is, why am I not getting a 0% interest rate? So before COVID-19, the housing and economy was strong with both new construction and with existing home sales at 13-year highs. So you've probably heard the Federal Reserve cut the interest rates to zero on the Fed funds rate. There is a difference between the Fed funds rate, which can change daily, and a mortgage rate that stays in place for 30 years, which I believe is the misconception here. Also, with the turmoil in the financial market, going on right now, the rates have risen a bit, even though the Fed had cut the rates. So even though they've risen, not to worry, they're actually still very low, and it's still a good time to purchase a home. And we do expect the strength to resume when things get better. And I just want to encourage you that things are going to get better. Another question I've been getting a lot is about forbearances. So even if you already own a home, or if you're purchasing a home, I think this is helpful information that you should know. But forbearance does not mean forgiveness. So if you currently own a home and you've been adversely affected by COVID-19, you may be eligible for a mortgage forbearance. Forbearance means that the mortgage payments would be suspended for a period of time, possibly up to 6 months. I've seen it anywhere from 3 to 6 months, but you'll need to get caught up when the forbearance period is over. So there's no financial benefit to exercising forbearance, as you'll either have to pay a lump sum, modify your loan, or owe the balance when you refinance or sell your home. And what you need to do is, when you're speaking to your servicer about setting up the forbearance, you need to make sure that you find out, when do you have to pay that money back? When does that have to be paid? Is it at the end of the forbearance? Is it at the end of the loan? This is a very important question, and you need to know ahead of time. I actually had someone ask me yesterday about this, and I said, you need to ask the servicer, because it's really important that you know how this is set up and what the expectation is. And then you still have to make your monthly payments until you notify the mortgage servicer and agree to the forbearance terms. So don't just stop making your mortgage payments thinking that you're just going to go into forbearance. You have to set up the terms ahead of time. So these are just a few of the changes that are going on in the mortgage industry, as well as a couple of questions that I wanted to make sure that I was answering for you. But again, if you have any additional questions that you want to ask me, then please reach out to me at any time. I'm here as a resource for you. I want everyone to stay healthy, stay well, and I look forward to working with you in the future.